there's like so much noise um, in every meeting, in the email, in our head. And there's really one simple rule I, um, I have, and it's always about what makes money, what makes money, what makes money.
Welcome to Scaling Without Breaking podcast, the show for startup leaders who are done winging it and sick of everything being a bottleneck. Your team's growing, the cracks are showing, and what got you here is officially breaking. Each week, you'll hear raw stories, sharp strategies, and real talk from founders, operators, and advisors who've scaled through chaos and built companies that run without constant firefighting. If you're ready to start leading like a CEO and move beyond just surviving, you're in the right place. Here is your host, Roland Siebelink.
Hello, everyone, and welcome to another episode of Scaling Without Breaking, the podcast for those people that are done being just a founder and winging it and want to be a CEO that's successful in running a bigger startup. Today's guest, I'm very honored to announce, is half German, half Czech. He splits his time between Las Vegas and the twisted Milar Tower in San Francisco's financial district. He built and sold the largest incorporation provider in Hong Kong, and then he acquired the largest registered agent in Nevada. But here's what makes him different. While every cap table company in Silicon Valley burns through venture capital chasing growth, he built something that actually makes money. His platform delivers private company valuations in hours, not months, and it's synced to Nasdaq's trading schedule in real time. Believe it or not, this man manages over $300 billion in client assets, including companies like Perplexity AI. He calls it European Hong Kong pragmatism. In an industry where Carta took a massive valuation hit, his company just keeps growing and growing profitably. With that, everyone meet today's guest, Tom Milar, the founder and CEO of Eqvista. Welcome to Scaling Without Breaking, Tom.
Well, I don't even know if I deserve that kind of introduction.
We like to do a good introduction, making sure that
that's very
everything comes out that in one go, that people know how special our guests are on this.
Thank you so much, Ron.
Right?
Thank you. Yeah, I'm very happy being here. Thank you so much.
Of course. Thank you. It's our honor, actually. So, Tom, let's dive right in. You called yourself a Hong Kong European pragmatist in Silicon Valley. Everyone around you is raising crazy money and burning it, especially if they're in AI these days, right? But you're profitable. Yeah. What do they not understand that you do?
Roland, I moved to Hong Kong, and scaling without breaking, that actually explains how we succeed. In Asia, it's not like in Europe, even though better in the United States. You can fail and go back again, right? So going back to your original question, I built multiple companies, I would say more than 8, and all of them were profitable. That was always the reason why I was successful in Hong Kong, about the same mentality to the United States. To be a bit critical here, I always tried to raise money, but I wasn't successful for some reason, even though we support heavily funded companies, multi-billion-dollar companies, in those sales companies, even though our largest client or the seed level raised $100 million, $100 million. And I was not able to raise the $1 million for our PC, our seed, which is extremely funny. Yeah,
funny and frustrating, perhaps.
Not really. I was not really, the way I fundraise, right? It's just basically, hey, this is what we do. We can become extremely successful, right? Pragmatism, that's something that probably hold us back a little bit, right? That's what we have. This is what I brought from Europe is, that we have a hard time to hype, Europeans, we have a hard time to hype the startup, or we overhype it. So we don't really know why there's the balance. Elsewhere, like the hyping the company, it's one thing, but the other thing is a product. And I believe the product must come from founder, can't hire, CTO or product manager who's going to do the product, right? The first kick and the first idea was the heavy lifting, the first code, first disclaimer, first privacy policy, the first engagement letter, the first pricing comes from you, from the founder.
Exactly. Since you built like 8 companies, would you say like your model is generally like built to flip?
Not really. No. Actually, still own a few companies, right? I'm paid with salaries.
And of course, you do see the investment thesis of many founders quite up close with Eqvista, because you tell us a little bit more about what you do. It's actually a valuation platform, is it not?
So let's start from the beginning. Yeah, Thomas Milar, founder of Eqvista. So what we do, manage equity. We also have the administration. The software, it's one thing, right? But I'm a strong believer. The private market is missing price infrastructure. You know, let's start with the stock price of any star. Right? We have a 498 valuation price. 498 is the lowest number stock price when we issue stocks to founders or employee stock option plans. Options. Then you have a venture round. Some venture round might have a different, right? Then you have a secondary market. The secondary market, you have multiple platforms. There's just so many different prices. So they are like, hey, you know what? Let's actually build something was really, really cool. Again, cap table management, equity management, that's one thing, but I spent most of my time building the pricing infrastructure. One through price, which gives any founders, members, or is the market if you open the price public. Private companies would usually go public to get a capital, get massive rounds, right? But now it's not that the case. They can go and raise, $500 million just like that, right?
So they stay private much longer and create a lot more value while being in private hands still, right? So is there still any point for retail investors to jump in at IPO price?
Of course, definitely. Yeah, but that's more the story. That's probably more what's going on in the company, right? Like obviously, we have a failed IPOs. For us, we are looking at it, the private market. That's what makes us special, because I can clearly say that we will become very soon the largest platform.
And 95% of your customers are US based.
US based.
It sounded like, yeah. And your go to market has been built almost entirely on just dominating search engine optimization. Is that right?
Yes, that's right.
So still mostly dependent on inbound.
It's then the SEO was one thing. That's how we actually started. Now it's basically just being online, like heavy presence, being online. That's how people can find us. But it's actually quite interesting. Some founders waste so much time. I understand if you're a hardware company, right, you have to really show the product, right?
I mean, you've seen many founders, you see them work, you see the differences in valuation of their companies, right? So maybe what's your advice to a founder not to be wasting time? What are the key traps?
You know what? I met the hundreds of entrepreneurs, and again, I believe in. I don't want the title CEO, but I believe in two type of founders. The founders who can raise money, right? Crazy rounds. Then the one who can make a product. But the ideal founder, it's something between, right? So that comes also with the personality. So I think it is mostly that they are not fast enough. The execution, I believe the execution is the key. So mostly it's product. And I think people neglect the product. They don't understand the pricing. They don't understand how to penetrate the market. They don't know how to sell to clients, and the way how it works is that, you have a discussion with your client about an agreement. The client might have 5, 6, 7, 8 different points in the agreement. So what do? Quickly fix that, the pricing doesn't really fit. So again, you keep changing it until it might make sense. At some point, there would be a time where we would fix the price like 8 times. 8 times would change 8 times.
So the real compelling value that you provide to founders is this real-time valuation, right? Is that something you can give us a little glimpse of in what have you
Actually,
built? What could you show us?
yeah. So this is the real-time company valuation. Privately owned company raised $100 million and or 1 billion. It doesn't really matter. You give us limited data, and we can build a stock ticker for your company. So you can see the valuation of your company in real time. So it's good for founders, CEOs, CFOs, shareholders. You can also open this to your shareholders so they can see the value of the company, how it goes up, up and down, right? And we have a few more basic informations. What are the medians and averages across different benchmarks and the news. So this is very important. And we are launching a mobile version, so you will be able to see the value of your mobile. So
And do you sell this primarily to founders or also to their investors?
Yes. Founders, actually, we have a multiple products. So this is the isn't that cool? Look, so you can see actually the stock price of your company in real time on your phone. So there's that different use cases. So obviously founders, they should know what's the company value, and the Eqvista real-time company valuation helps also with different structures, fund structures. So you have a let's say you are a fund admin and you have 500 companies in your fund, and it will be so hard to process over 500 companies traditionally. Each valuation might take 10, 15 hours. So you are looking at 700 hours of work. That's job for 6-7 people. 6 months for 6 months. So by the time they finish the evaluation of the last company, they would have to start evaluation of the first company because it will be already outdated. Fund managers, they have a stake in these companies. They don't really know what's the value of the company. So let's build something cool. So we built grouping and structuring. So the fund valuations, the fund owners, they can see how much they own in each company entity, and what's the percentage they own. What's the value? How the value grow over time? Then we group it up all the way to the holding, so you can see the state in each of them under the. So we have different use cases. So we try to sell it to different funds, leverage funds, and obviously secondary providers.
Having started 8 companies, you must have built a lot of experience on what, as a founder, you should focus on versus what are the things that you should just delegate or not even care about. What are your thoughts on that?
So it's a noise, right? Like there's like so much noise in every meeting, the email, in our heads, and there's really one simple rule I have, and it's always about what makes money. What makes money? What makes money? That's it.
Yeah.
For example, right? So you build hierarchy of problems, which leads to a revenue, right? So anything what's closer to revenue, you prioritize over to what's not as important as it is.
Very simple, right? Like, is it
It's
making
very
money or
simple.
not?
Yes,
If it's not making money, why are you bothering me with it, right?
yes, 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 yes. Like for instance, I can give you an example, right? So I'm actually very proud of it. Our website was hideous for like 6 years. It would take us 6 to 9 months to prepare, right? And I knew that it's not really that important. The design it's the last thing that really sells.
It's interesting. I've had the same experience, especially targeting startups, that the more design there is, the less likely it is to convert.
Yes, I have very simple rule. 2 free colors on the website. That's it. Simple button. Call us. You know,
Exactly.
uh,
What else do you
and
need, right?
that's or place an order or whatever, right? Just
Yeah.
don't bother with the design. I had a discussion. So we acquired a company 2017, Ink Paradise,
Hmm.
incorporation service provider. It probably a marketing guru, Neil Patel. Do you know Neil Patel? So I had a discussion with him whether we should change after acquisition, whether we should change the design or not. And he's like, you know what? You can actually kill a business.
Right.
You can kill a business. So just don't touch it. And he was
Don't touch,
absolutely right.
don't touch things that are
But
already working,
but
right?
but yeah, we used the WordPress back then, and I think we have to we changed the design.
Yeah.
But it's funny. It didn't increase the conversions. It did nothing.
See, your intuition was right. When you say, like, you see many founders being too slow, right? Is that often more an issue of focus, or is it more an issue of not having enough people, or trying to do too many things themselves? What do you think?
I think it's just misunderstanding what they should do. I think it's just natural thing. Some
Hmm.
founders would make so many wrong decisions. You would raise $400,000 uh, instead of building the product yourself and do the heavy lifting yourself. They would be already thinking about pre-seed round, right? So they would work for 1.5 months, 2 months, get a bunch of people and go and raise more money. And once they get to the cycle and you rely on the human capital and the ideas and people you are hiring, you're gonna fail. So you either rely on a product and do a strong product. So you deploy people whose product is strong,
Hmm.
right? Or you feed the beast, with venture money, right? And
Yeah.
then it's a weak, The best is the combination of both, but yeah, I think the product
Hmm.
and
So,
autonomous.
Tom, another question that, of course, I have a personal interest in. As you know, we work with a lot of scaling companies to help them, remove the drag that builds up and accelerate more towards business results. So, if I were to look at your real-time valuation, what are the factors that drive that valuation the highest, the fastest?
There are two factors. Is the revenue, right?
Yeah.
That comes first, and then how much they raised, right? And how much they raised is really about how well they can sell the
Hmm.
equity, But I think to be like super pragmatic, it's to find a space where you don't see much competition, but the valuations are really high.
Yeah.
And just jump into it, but not for the sake of the valuation, for sake because you understand the model. But yeah, it's really deep tech. You might have a zero revenue raise valuation, right?
Right.
But it's a question whether to be opportunistic and go for industry where you see massive rounds, or to whatever you want to do, you understand, or we don't understand, we learn, and then try and build it.
That's awesome. So we're almost at the end of the recording, Tom, but I want to always talk a little bit about the person behind the company, right? So we already mentioned in the beginning you're half German, half Czech. Started your entrepreneurship journey in Prague in 2006. Tell us a little bit more about how you grew up and
You
what
know what?
your
Actually, I
childhood
started in
was like.
Mexico. I started
You
in
started
Mexico.
in Mexico. Excellent.
Yes. Yeah. So if you if you Google, you know what nopal is? Nopal,
No
N-O-P,
palas, yeah.
nopales. Yes. So I brewed a beer out of nopal.
Oh, cool.
In Mexico, I gathered samples from one of the fields in not far from Monterrey, Mexico, not California, Monterrey. Yeah, and brought it to Europe, uh, and brewed beer. So if you Google Nopal beer, it's my beer, my invention.
Excellent.
So that's how I started. That was one of my first. I'm still engaged in that company as an advisor, but it's just cool to see that things last. What I built, and it has a legacy, behind it.
What was it in your childhood or your teenage years that prepared you to become a founder?
You know what? I think it's ice hockey. Hockey, ice hockey, and I was never good, right? And I think it just the thing is that you just never give up. That's what I think I learned when I was a kid, right? I just somehow, for some reason, I understand that principle. That if you never give up, you just do 1,000 little things every day, and I really do 1,000 little things. Like I touch everything. Yeah, and that's the persistence. Just never give up, never ever.
How important is it to have that persistence as a founder to keep going no matter what negative feedback you get?
Ron, I think it's just the most important thing.
Mm-hmm.
I think it is. There's so many ugly days, and what I think in how I started in Hong Kong, I took a train. I took a train from Beijing to Hong Kong. It was 28 hours, 22 hours long
Yes.
journey back in 2010. There was no speed train, right?
Yeah.
It was still like the old train from the 60s. And you are, then you end up in Hong Kong. Hong Kong is island, so you have to take a boat and MTR metro subway. And now you are in Hong Kong. You have $3,500 US dollars in your pocket, and you have to somehow find a way how you get it.
So, what is the most important piece of advice you would give a younger founder, somebody who's just trying their first company?
Just start with the product and just make sure that the pricing is right. You know how to market it, you know how to sell it, and just get money into your account right away. Everything else is the most.
Very cool. Very cool. So, Tom, where can people reach you? And is there anything they should download from your website?
Yes, you can reach me at tom@eqvista.com, tom@eqvista.com. And if you reach out to me directly, we can build one of the real-time valuation for you, so you can see the stock price of your company in real time.
Love it.
We do it for free. Just a few. Be fast.
Of course.
And yeah, tom@eqvista.com. Happy to help with anything.
Cool. And if somebody knows me and doesn't know Tom yet, I'm always happy to provide an introduction as well, of course. So, Tom, this has been great. Thank you so much for joining the Scaling Without Breaking podcast. I'm sure the listeners will find it as fascinating as I did. And yeah, for the audience, thank you again for tuning in, and we'll have another fascinating guest for you next week.
Thank you so much. Thank you, everybody. Thank you.
The Scaling Without Breaking podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.